Tax Talks with Pros. Employment income.
Welcome back to Our Understanding, Canadian Tax Return Series. Nadia here. Today we're doing a deep, practical run-through of T1 employment income, lines 10100010105 and 10120. We'll focus on tips, volunteer exemptions, and commission employee rules, the stuff many misunderstand over the most. Siraj, ready?
Ready, Nadia. Let's dive.
Yep, let's go. Okay, first up, line 10100. Broadly, employment income. Box 14 on the T4 usually feeds it, and tips are employment income too. But the nuance is controlled versus direct tips. Big practical difference for CPP, EI, and reporting. Siraj, can you break down the controlled versus direct distinction for our listeners?
Sure, controlled tips are tips the employer controls or possesses before paying them out. Think pooled electronic tips, mandatory service charges, or when the employer collects and allocates tips. Those typically get included on the T4 and are subject to CPP PEI. Direct tips are paid straight from customer to employee, cash handed over, for example, and the employer doesn't control them. Those aren't subject to employer CPP EI withholding. But, and this is important, direct tips are still taxable income and must be reported by the employee. You can elect voluntary CPP contributions on Form CPT 20. The more the employer touches the flow, the more likely CRA treats them as controlled.
Right? And that Ristorante Maneno decision, Siraj?
Yes, Ristorante Mano FCA 2022 is a key case. The Federal Court of Appeal upheld assessments for CPP-EI on electronic tips handled by the employer. So courts are backing up CRA when tips are pooled or routed through the employer. Practically, that means taxpayers need to understand how tips move through the POS or payroll. If the employer system collects and distributes electronic tips, don't assume they're direct. That's an audit red flag.
Exactly. Restaurants and hospitality businesses changed policies after that decision, right?
We've seen guidance from Restaurants Canada and law firms about reviewing POS flows and tip out policies. Employers who thought a tip out made tips direct sometimes found themselves facing CPP EI assessments.
Good. Now, for taxpayer doing their T1 ANS workflow, where do you start? I say start with industry and documentation. Consider whether you work in a tip heavy field, what's on your T4, and whether you keep personal tip logs. Siraj, what guidance do you want to give here?
Collect the T4S, employer statements about tip pools or due backs, personal tip logs, bank records if tips were electronic or deposited, and any employer communications about mandatory service charges. Also check for CPT 20 if the employee wants CPP coverage for direct tips. Keep those records. CRA will want contemporaneous evidence for off-slip tips. And remember, Quebec has a declared tip regime, so be alert for provincial rules.
Is there a reasonableness check?
Absolutely. Compare total reported tips to industry norms. If tips look low, recheck the calculation of tips and report full amounts voluntarily. Software sometimes posts off-slip tips to line 10400 other employment income, which still affects net income and credits. Watch for common data entry errors like double counting tips already in box 14 or putting tips on line 13000 instead of employment income.
That's practical. Quick example time, short ones. Siraj?
Server gets $8,000 in pooled electronic tips distributed by the employer that's controlled on the T4. Include on 10100 CPP EI apply. Stylist collects $6,000 in cash tips directly, not on T4, must still be reported as employment income, often via the software path to 10400. They can consider CPT 20 for voluntary CPP. Banquet hall adds a 15% mandatory gratuity to invoices, likely controlled, payroll and HST may apply.
Perfect. Now, I want to make sure taxpayers hear the audit traps loud and clear. Siraj? Great.
Don't treat employer pooled electronic tips as direct tips. Don't fail to reconcile T4 box 14 with expected total tips. Keep records for cash tips. And if you want CPP coverage, Ensure CPT 20 is filed rather than assuming it happened. Those missteps drive reassessments. We see it all the time. And employers should draft clear written tip policies. Misclassification can create huge CPP-EI assessments on audit. Also, when employers touch the funds, like allocating via POS, it's controlled. So payroll teams need to validate POS rules, tip out logic, and whether amounts are mandatory service charges.
Okay, moving on to line 10105, emergency services volunteers. Siraj, you've represented clients on this, so walk us through the choice between the $1,000 exemption and the $6,000 credit.
Line 10105 reports the tax exempt amount for payments to eligible volunteer firefighters and search and rescue volunteers. Up to $1,000 per eligible employer appears in box 87 on the T4. The taxpayer has a choice. Take the exempt amount box 87 reported on 10105 or claim the $6,000 non-refundable volunteer firefighter / search and rescue credit on lines 31,200, 200, and 1,040s. You can't do both. The $6,000 credit requires at least 200 hours of eligible service and documentation. So taxpayers must identify box 87 and hours, then run the numbers in software, choose the option with a better tax outcome. Simple but easy to miss.
Small but critical detail, the $1,000 exemption can apply per employer. So, if someone has multiple T4S with box 87 from different municipalities, taking the exemption per employer may beat the single $6,000 credit. Check both ways.
Practical checklist then. Did you volunteer? Get hours and letter. Get T4s with box 87. Don't claim both options. Confirm whether the taxpayer was employed in the same or similar role with a salary that can disqualify the exemption.
Yes, and retain our logs or certification. CRA often requests proof of 200 hours if the $6,000 credit is claimed. Also, watch for EI CPP nuances. Payments could still be insurable or pensionable depending on payroll setup, even if tax exempt up to $1,000. Great. Short example.
Volunteer firefighter with T4 showing box 14 equal sign $800 and box 87 equal sign $1,000. If they pick the exemption, report $800 on 10100 and $1,000 on 10105. Don't claim 31220. If they pick the $6,000 credit, add both amounts to 10100 and claim the $6,000 on 31220. Run both scenarios.
Nice. Now, commissions line 10120. This one trip people up because box 42 commissions are included in 1010000, but 10120 discloses them. And commission employees may be able to deduct expenses on line 22900, but only with the signed T2200. Siraj, payroll and forms perspective.
Line 10120 is disclosure for box 42 commissions already included in 10100. If you are claiming commission-related employment expenses, you need a properly completed and signed T2200 from the employer, and then use T7077 to calculate line 22900. Important payroll tie-ins. Some allowances can affect CPP-EI and Schedule 8 reconciliations, and GST/HST rebates on expenses use GST 3.70 with appropriate reporting. Also, remember that the total expense deduction is capped by commission income unless the taxpayer elects the salaried employee method, which is more restrictive.
From a documentation and dispute perspective, the T2200 must support that the employee was required to pay expenses under their contract, normally worked away from the employer's place of business, and was paid by commission. Recent cases emphasize a strict reading. Vague images clothing claims get denied, and courts want contemporaneous vehicle logs. Without solid contracts, employers may refuse to sign T2 vows, 200 TISAs, and CRA will deny expenses.
So, the practical workflow we give taxpayers: look for box 42 on T4, request the signed T2200 from employer, collect receipts and vehicle logbooks, and ensure the expense total doesn't exceed commission income unless you're switching methods.
So, no T2200 on file, vague contractual language, weak evidence for business use percentages, and clothing grooming claims. Those are frequent audit triggers. Keep the logbooks and the signed T2200 in the file. And remember that GST, TON, and HST rebates on expenses are reportable income when received. Siraj, example of this?
Practical examples. Box 42 equals $18,000 with $12,000 supported expenses. All good if the T2200 and logs exist. But box 42 equals $6,000 and expenses total $9,000. You must limit deductions to $6,000 unless you switch methods. And if there's no T2200, many of these claims simply won't fly.
Okay, quick recap before we close. 3 core takeaways for taxpayers. Number 1,
Tips are taxable, distinguish controlled versus direct. Controlled usually on the T4 and subject to CPP EI. Direct tips still taxable, and the employee can elect CPT 20 for CPP.
second,
For emergency services volunteers, choose between Box 87 exemption on line 10105 and the $6,000 credit. Don't claim both. Document hours and retain proof.
third tip,
Commissions, Box 42 shows up on 10120 but is already in 10100. Commission employee expenses need a signed T2200 and T7077, and deductions are capped by commission income unless you change methods.
keep thorough records. Anything else to add?
Employers implement clear tip policies and review POS tip flows. That prevents controlled tip misclassification. And when you believe there has been underreported tips or weak documentation, think about voluntary disclosure or full reporting. It's better than an audit reassessment later.
Perfect. That's all for this episode of Tax Talks with Pros. I am Nadia Kimani. We hope you enjoyed this podcast. Thank you. See you next time and take care when filing those lines. Bye. Thanks, Siraj.
Thanks, Nadia. Great session.
Would you please click the like and subscribe button so you receive future releases and forward the podcast to your friends, family, and colleagues. This presentation is for the audience's general information only. Please consult your accountant for professional advice. You can visit our websites www.ifmsolutions.com and www.disabilityrefunds.com. At IFM Solutions, you will find about our accounting, bookkeeping, payroll, and advisory services. Our Disability Refunds website has a treasure of information for people with health issues and their family members, especially those wishing to apply for disability tax credit and CPP disability. For any comments, suggestions, or to contact us, please reach out at 1-855-786-4786 or email us at info@ifmsolutions.com. Thank you. See you next time and take care when filing those lines.